Good evening, all. Hope you're enjoying all this weather we're getting in North America because it's something else. It is Monday and it is the 6th of January, 2025, and we're getting just on to 6:05 p.m. Central Time. I mention that because parts of the country have just been paralyzed. It's one of the big winter storms. You know, we get them every year, so out east it's unusual. They haven't had this kind of snow in years in Washington, D.C., I hear, and other parts of the East Coast. Chicago, we're just getting a dusting. It's downstate that they're getting the rest of it. Now, today's an interesting day. You know, everything was fine, and then the Washington Post breaks out a news story that from anonymous sources, they're hearing that President Trump is going to wobble on tariffs, and it's not across the board, blah, blah, blah. An hour or two goes by, I'm watching this, and I'm going, okay, is Trump going to come out and say anything? Is this worthy of it? And of course, away he goes on his Truth Social. Fake news. That is not what he said. He doesn't know what they're talking about again. So what that really was the opening salvo. Again, the president's going to fight with the press for years to come through his whatever he does. I say years. It'll last well beyond his presidency. That's my guess. But I don't know what's true. You don't know what's true. Here's what I know. We're going to get a series of reports tomorrow. Job openings and labor turnover, that's going to be an important number. The ISM will release their U.S. service sector numbers for December at 9. Redbook Group will come out with their weekly retail sales. November trade deficit data is coming out. They're looking for an increase near $79 billion. And the Fed President Barkin will speak on Tuesday morning. Now, you know, in the Fed, William Barr, the vice chair of the Fed, has turned in his resignation to be vice chair. He is not resigning from the Fed board. He just doesn't want that position anymore, and rightly so. He's an enemy of the president, doesn't need the battle. He wants more regulation on the banks, and the Trump administration doesn't. Now, the first big turmoil happened today in the Canadian dollar. I'm looking to see, do we even have this here? I don't think yeah, here it is. And in the Canadian dollar, what took place is Justin Trudeau, the Prime Minister, has resigned from the head of the party. So it's the beginning that they'll pick another person to take over the party, and that'll be the end of him as Prime Minister. But it really boiled down to that trip that he made to Mar-a-Lago didn't work. I don't know what the energy or synergy is between he and President Trump, but it obviously wasn't good. But Trudeau was in trouble when Chrystia Freeland resigned. I mean, there was the person behind the programs, and what she saw right away is the programs can't go the way they are. And the question is she a candidate to work, and how does she work with President-elect Trump? Those will be important issues you have to look at. As for the stock market, you're looking at a market coming up. It was led by tech in the CES meeting that's going on. I understand that NVIDIA's chair is speaking to the group, and tomorrow we're going to get some guidance on NVIDIA. So the market had a big tech day there. What drove today the metal markets, and that's what this video is primarily about, has to do with the fact, I think, of tariffs more than anything else. Are they? Aren't they? What's going to happen? Where are we on that story? So silver gains rather large on the gold market. Copper also got a pretty good bid out of it, because if there's no tariffs, does that change the component prices of things? What does it do? Or is this just not factual? Energy markets down a little bit. So when you look at the gold-silver ratio, the market is sitting right now at 26.45. Each day it's either side now of the 18-week moving average of closes, looking for its direction. When we look at gold on its own, it's certainly not acting in a bullish mode just yet. The pattern we have is one of a lower low and a higher high. That's not an uptrend at this point in time. And the battleground, when you put on the bar chart instead of just close-only chart, you get to see where the market's fighting. It's fighting in the neighborhood of the 18-day average, and just above it is the 100-day. And we've had a bearish crossover where the 18-day has gotten under the green. If we just drop back a few days, you will see it was the opposite way. So on the close today, it was the flip-flop. But remember, we're into Tuesday's action already tonight, and you're getting bearish crossover in that market. If it stays down, one of the potential numbers it might go to, the 25.90 level. To get away from this, the market's got to get back over now the 26.81 level in order to convince the market there's more upside left in this, and maybe it can make a run to the upper Bollinger Band. I don't see a play right here in the sense of I don't see a trend, and bias isn't working well. I don't like the bearish crossover. In slow stochastics, momentum's pointing up, so maybe you get up to these numbers, but I don't see that you're getting much more than that. When I look at the gold-silver ratio, you can see what's going on here. You pulled back under the 18-week average. Now we have to wait and see in the morning if it stays like that. If it does, I have to change this to a silver color chart. It means that now that silver's gotten underneath that, if it can hold on, as the numbers drop down, silver's worth more than the gold. You're able to buy an ounce of gold with fewer ounces of silver. In the copper market, you rallied right up to the resistance of the 18-week average. I think you see that right above it's the 200-week at right here at 30.65, about 20 cents higher. But you've spent some energy, you've come up to this zone, and you've pretty well neutralized the market. I don't see an uptrend or a downtrend just yet at work. You'd have to close convincingly over 30.45, basically where the market's at, to say you got a shot at the upside. In the copper market, what you effectively did, and this happened a while ago, is you broke the market back. Now let me explain this. Let's get rid of this action. You already had a higher high and a lower low. You weren't trending, but you had an embedded reading, as you can see, and this was Friday. Now when we come into today, the market loses that reading. The objective when you lose it is the 18-day average, and that's pretty much where the market's gone. So you've ended this swing down, but I don't know what the next swing is, and I don't think the market does. You're not seeing that on the chart action. What you've done is lost a phase of bearishness, and you held very nicely the Bollinger Bands on the downside and came back up in the metal markets. Last, in the dollar index, we've been under some selling pressure. You have lost the bullish embedded reading. The way I teach the courses on this, and by the way, the courses that we had, our course sale, they're still going on right now. They end today, Monday at midnight Central Time. We've had great success with it. Thank you. You have a good deal because you're not getting that good of a deal on my courses in this year again, not when I put them together and give a free course like that. But I can see how the market is coming back down right through here, as you can see. And the question is, how does it do if it hits that 18-day average? You can't turn this into a bear trend, because even if you take out this low, all you'd have is a higher high and a lower low. And the target of the market with the lost embedded reading is really to find support against 107.56. So you put that all together, you come up with game plans that you think you can work with. We're now just weeks away from getting the new president coming in, and that brings me up to reminding you that you might want to take a look in my morning subscriber videos. I cover 40 futures charts with very specific buy here, sell there. This is what I think you do, where you do it. I do the same thing in the Spider ETF. My subscriptions include, and I'm going to be doing a special report this week, free access to that, trade recommendations. The combo package covers in the Spider's 40 some odd charts every morning, Monday through Friday, that the markets are open. We're not going to be open, by the way, January 9th. That's the observance day for President Jimmy Carter. And we'll be back on Friday, but we'll obviously all be here until then. So just go to iraepstein.com research. You can also move your cursor to the top up here, and that'll get rid of it for you. That'll get you all set up. So with that, I'm Ira. You have yourself a good day.